The 31st Annual General Meeting of the American Chamber of Commerce in Sri Lanka 2023 was held in Colombo yesterday. The US Ambassador to Sri Lanka, Julie Chung, and several other dignitaries attended the event.
Sri Lanka's strategic location, strong infrastructure, and educated population could turn this country into a leader in a rising South Asia. In 2023, USAID is providing $35 million to support Sri Lankan businesses and strengthen Sri Lankan governance. The U.S. Development Finance Corporation has provided financial support worth $128 million to companies in Sri Lanka since the start of the crisis, with more money coming in the pipeline. And this month, we welcomed the first delegation of our TIFA, U.S. Trade Representative's Office, to hold talks for Trade and Investment Framework Agreement Council. This visit will lead to an action plan on measures to strengthen trade and investment between our two countries.
Acting Minister of Finance Shahan Singha delivered the keynote address during the event on Wednesday.
Whilst there remains a long way to go, as long as the reform momentum is continued, Sri Lanka has the chance of becoming the textbook case for recovery from a sovereign debt crisis. Sri Lanka's recovery thus far has been underpinned by a focus on deep economic reforms. This has been a crucial aspect of winning back the confidence of both local and global investors. Fiscal weaknesses has been the primary driver of microeconomic volatility in Sri Lanka. Persistent budget deficits due to weak government revenue generation contributed to public debt reaching unsustainable level. To address this, the government implemented major tax reform that enhanced tax rates in a progressive manner, yielding a 50% growth in tax revenue in the first 6 months of the year. Along with stringent management expenditure, the revenue enhancement has enabled a primary surplus in the first half of 2023, outperforming a key IMF target for the period. This is a remarkable improvement from a primary deficit of 5.7% of GDP in 2021. Sri Lanka has now put in place an appropriate tax policy framework, and going forward, the majority of the gains in revenue are expected to be derived from the improvements in tax administration and tax compliance. Towards this end, numerous reforms are being put in place at the key revenue agencies, that is the Inland Revenue Department, the Customs and the Excise Department. RAMES is in the process of being upgraded with the new version expected to be completed in the coming week. There will be enhanced focus on risk-based audits, digitalization of processes to minimize interaction between taxpayers and tax authorities, registration of persons outside the tax system, and developing an efficient refund system. The government intends to lock these fiscal gains by bringing in legislation in the form of a Public Finance Management Act in the coming months. I think we will do it before the end of the fourth quarter, which will introduce robust fiscal rules and disciplines on fiscal transparency and public finance governance. Public investments will be more focused and targeted in line with fiscal consolidation efforts.
The Acting Minister of Finance also made remarks on the external debt restructuring process as well.
Sri Lanka is entering to final stages of debt restructuring process, as important progress has been in engagements with the official creditor committee, China and commercial creditors. Once the debt restructuring process is completed, it will open up greater avenues for Sri Lanka to access external funding and put Sri Lanka on track to attract further foreign investments as well. Sri Lanka's attractiveness from an investment perspective has long been apparent, but has been thwarted by persistent macroeconomic imbalance. The recent economic crisis has been a catalyst for a long ignored reforms that would finally put an end to these economic vulnerabilities. This provides Sri Lanka with the opportunity to finally fulfill the tremendous potential that has been suppressed for too long.
The Board of Officials for the year 2023 and 2024 were also appointed during the AGM.